market is starting to climb a little bit higher this morning, despite having a wall of worry. There's so many things going on. There's jobs concerns. There are concerns about Washington and the debt ceiling and the budget. I am here with Mark Newton from Gray Wolf Equities. Despite all these problems, we seem to keep chugging away a little bit higher every day.
That's right, Deborah. I mean, the path of least resistance continues to be on the upside. Equities act resilient, and there are a lot of worries about the debt ceiling debate, about earnings being subdued. People have ratcheted down their forecasts already so much. Everybody's saying the market's overbought, yet the market's not nearly as overbought as it was last year or the year before, or even back in 2007. So we still act well. Materials and technology, industrials, they're all acting well. We've seen 4 of the last 10 sectors move to new annual highs last week. 9 of 10 sectors moved to 3-month highs. So there are some reasons to worry this year, but right now we continue to act well, and you know, the bottom line is that you have to stick with the trend until it shows otherwise.
One of the sectors you said that's starting to come back to life is technology that had been a laggard. Do you think that that's going to be sustainable?
I think it is. I think if you look over the last 3 to 6 months, both technology and energy have underperformed. And so these are 2 sectors to, in my opinion, overweight over the next couple months, thinking that these probably play catch up and are better risk rewards than trying to reach for financials or industrials at this stage, which have already made huge moves. You know, you're seeing weakness right now in the utilities and the staples, and these are classic risk-on type scenarios. And emerging markets, with the data out of China last night, continues to outperform also. So when you're seeing good strength in the emerging markets versus the domestic, it still pays to be on board. There are some reasons to worry, though, with regards to waning momentum as we get probably to the end of next month or March, but we'll talk about that later. But for right now, Dow Jones Transport's within 1% of all-time highs, and that's big because a lot of the Dow theorists are looking at this and saying, well, industrials moved to new highs and got above 2011 highs, but the transports haven't done it yet. Well, it looks like we're going to do that now. We're testing pretty key levels there. So, you know, you have to be selective at this stage of the rally, but the bottom line is you still have to be long and participate. And you know, technology and energy for me are the ways to probably get the more bang out of your buck, I think, in the next few weeks.
All right, well, as you know, you cannot fight the tape, and that's Mark Newton, and I'm Deborah Borchardt with The Street.